Hi everyone, and welcome to the on-demand section of Open Banking Expo Canada 2020. I think at times like this, it's even more important to have a greater diversity of thought, and hopefully we've done that across the 3 days of Open Banking Expo Canada virtual. But this is a kind of an extra special session where kind of we sit down with a true kind of fintech innovator and leader. So here we are with Dov Marmor, who is the newly appointed Chief Operating Officer at railsbank North America. For me specifically, I know a lot about kind of the UK and European arm. Obviously, the latest news around the acquisition of the Wirecard UK assets, all making kind of huge news and taking up lots of column inches in the press kind of across the globe. But something a little closer to home, we thought it was worthwhile having a conversation with Dov. So, Dov, many thanks for joining us. And I'll just hand over to you before we get going into a bit of a conversation as to kind of what your plans are, how you found the first few months, and what the next kind of 3 to 5 years look like for railsbank. So, if you can just give us a bit of a who you are, what you do, where you're from, and that type of thing, we can get going.
That sounds great. So pleasure to be here, and thank you so much for having me. So a little bit about my background. So I had a traditional career in more the institutional finance thing, and then joined the fintech ecosystem about 6 years ago, where I launched the US business for Currency Cloud, which is a Google Ventures and Visa-funded platform for building cross-border payment companies. So we could help somebody launch a Western Union competitor in about 6 weeks. And interestingly, that was Nigel Vernon, our CEO's first company. So this is our second round, kind of launching one of his UK-based startups into the US market. So we kind of go back quite a ways. He's definitely has a reputation for being an innovator in terms of platform as a service and creating toolkits that allow other companies to create the future of finance. So moving on from Currency Cloud, I went to a company called Green Dot, which is the largest prepaid company in the US. And over there, I ran their banking as a service division, where we built fintech programs for Uber, Intuit, Stash, Wealthfront, and a bunch of others. Essentially, even though they were a prepaid company initially, they had kind of built one of the largest infrastructures for banking as a service under one roof, complete with having their own banking license, APIs, program management, a bunch of other things. And we basically allowed other companies to create their own financial products and tie them into those ecosystems using the platform. So kind of definitely got to play in the API space at a very high level, kind of marrying core banking with kind of the new generation of fintech. So if you kind of track that career history, it was cross-border payments as a service, then banking and debit as a service, and then to move over to railsbank, I'm now responsible for two things. One, launching their platform into the US market, and then two is building our credit card as a service offering. So kind of the next place that most that most fintechs want to go, and consumer brands, is kind of having embedded credit experiences in their own app. It is a monumentally complex project, but it is a huge market opportunity and one that we're well situated to address. So my second project behind launching the US is also launching credit card as a service, which is a pretty exciting space that we can chat about through this interview.
Yeah, interesting. No, it's great. I think similar to maybe a few years ago, where kind of open banking as a transformation was something new on the scene, the next wave of innovation. Again, if I go back to a lot of the news and partnerships that are now being done in the marketplace, then banking as a service definitely is one, and yeah, it'd be interesting to hear kind of the evolution of that. So I've got to ask then, since you have been kind of in position over the last few months, have you seen many of your colleagues face to face, or have you got Zoom fatigue?
I have been literally the first time I've ever joined a company entirely remotely. So it's been kind of interesting. We're truly a global company. We have offices in Singapore, Lithuania, UK, Germany, US, Ireland. And what's been really cool is you can actually hire top talent in any one of those places. So the best in breed in their particular segment of the world without being limited by the physical location of anyone on your team. So while it was definitely a learning curve, getting used to building a business completely remotely, it does have its own distinct advantages as well, which is you're not geographically shackled by the level of talent that you can attract. And we've definitely taken full advantage of that.
That's good. That's good to hear. I think again, playing a lot and speaking to a lot of different organisations in the fintech space is definitely a huge opportunity there. So that's good to hear. Okay, so diving straight in then, in terms of your aspirations for railsbank North America. Obviously, you and Nigel go back a fair way in terms of previous projects that you've worked on. So perhaps this was always in the pipeline. But yeah, it'd be interesting just to kind of get a bit of background as to kind of what the strategy is moving forward. Look at some of the timeframes as well, as you look at kind of what that success looks like in the future.
Yep. So it might help to give a little background on railsbank itself. So company is a 4-year-old company, VC backed. And today, most of the customer base is in the UK and Europe. Over 150 companies built on the platform, over 1 million end user accounts. And that's before we complete the Wirecard assets acquisition, which will obviously monumentally grow the size of that business. It's a battle-tested platform today, specializing in payments, banking, and cards, as well as compliance. And we provide those services to companies that want to create their own financial products. Now, what's really cool about the platform, it was built from the ground up to be a global utility for building fintech products. So all of our APIs are country agnostic. Things like open accounts, send money, receive money, check transactions, issue card. And then the concept of Rails is we connect those into the local banking ecosystems of the various countries in which we operate. So with the launch of Singapore and now the US, will be one of the only platforms out there where you can actually build a product once against one series of APIs, and that financial product will work on 3 continents. And that's really valuable when you think about the type of global consumer companies today that operate in multiple different regions. To add fintech into their app, it's traditionally been a very regionally based business, right? So you kind of had to build a separate product everywhere that you went. Railsbank's been architected from the ground up to solve that problem by being global from the ground up. So that's kind of differentiator number one, is that we actually, by the time we're launched, we'll actually hold a very interesting role in that market. Number two is that we're adding credit as a rail onto the platform. So if you consider kind of the way a credit card is architected, you have accounts, you have cards, you have compliance, all those things are already built. And then we're adding an additional layer of credit that allows you to tie a line of credit to a card or to an account, which will allow you to create a credit card or a whole loan product. And for the customers that we reach out to in the ecosystem, all of them, they want to add credit as a value add to their ecosystem. They already have their own apps, they have their own customers. Credit is an additional business line. And they don't necessarily want to build that entire infrastructure from the ground up in order to offer that as a solution. So Railsbank comes in and says, one turnkey solution. We take care of all the complexity on the back end and let you bring a card to market in your brand. And more importantly, is an experience in your app. Because if you have an app, the only place your credit card experience should live is right there. And that's something that's at odds with the traditional co-brand experience, where I need to send somebody somewhere else to manage their card. And today's tech companies don't want that.
It's interesting, and I wonder, in terms of the kind of Wirecard assets, this is something that we didn't necessarily discuss beforehand. So you may say, actually, I don't want to chat about it, but let's try. So just looking at it, as I said, it got a lot of traction globally. Was that kind of I guess an opportunity that ultimately wasn't there, it came up and it was a bit of a no-brainer, or was there actually more strategy behind it? Be interesting to kind of get your thoughts on that, depending on how close you were, obviously, to that deal.
Yeah, I wasn't working on it directly. I would say that it was a good strategic fit for the company. Also, I think we've kind of built our platform with a core ethos of everyone should be able to provide innovation in the financial services industry, provided they meet certain minimum criteria, right? So that they're responsible and they have a good idea and they know how to execute. And a lot of the Wirecard customers are kind of put in a bit of a precarious situation based on something that wasn't their fault. And I think Railsbank was actually very well situated, having already built a platform to our scale in order to kind of help those companies continue to do business and continue to innovate. I think, Wirecard had a lot of really valuable assets within their company as well, and things they learned how to build, as well as a lot of the people that we were able to bring on board and help us in that scaling journey. So I think for a lot of reasons, Wirecard made a lot of strategic sense for railsbank. So I'd give you that as the general context background.
No, that's good. I appreciate you taking the time to answer that because, as I say, it wasn't something that we pre-prepared in advance. That's for sure. So, okay, so moving on then, you've kind of led from the front in terms of working within startups, taking them through to sale. Obviously, working in more established firms as well, right the way through to kind of multi-million-pound firms. So, I think it's quite obvious that fintechs are now kind of starting to rebund and offer more of their own services, and that's clear not only kind of Canada, America, but ultimately across the globe. As this becomes more convenient in terms of choice for consumers, could they become a real threat? Do you think to both the incumbents and the neobanks?
I do. I think, look, in the future, we're going to bank with the brands that we love and not with traditional banks. So I think that trend is already kind of taking its way. I think some of the fintech apps are far ahead of others, but it's all about kind of providing a more customer-centric and user-friendly way for people to operate their finances and kind of put that part of their life on autopilot. And I think a lot of companies are doing some really great things there. I think traditionally financial services is a bit much more fragmented. So my credit card experience is separate from my checking experience, is separate from my insurance experience. And there's really no reason they shouldn't all be together. I think it's just a function of an industry that's been grown over multiple years through acquisitions and legacy tech. And it's just been kind of hard to provide that holistic experience to customers. The other thing that I just find really interesting is that, there's a reason that a lot of banks, when they kind of create new products, don't actually succeed. And it's really just a mindset of the company itself. So if you look at the tech companies and the consumer brands and why they've been so successful, it's actually product at the core of everything that they do. And I think railsbank shares that general philosophy. And if you look at the historical place of financial services, margin is at the center of everything that they do, right? So it's actually long-term profitability for shareholders and investors and things like that. So if you look at just the output of the quality of products and the user experiences, and on one side, it's a company that's driven by product above all else, even at the expense of margin. And on the other side, it's all about driving margin at the expense of all else, oftentimes product. So what's really cool about playing this platform that's connecting legacy financial services providers to the new product people that want to build financial services is you can actually create enough value for both parts to achieve their goals. Because the fintechs kind of do something really well, railsbank does something really well, and the traditional banks do something really well. And we basically have to figure out how to marry those core skill sets and create greater value together than we do as individual pieces.
Mm-hmm. Is there I guess a follow-on question from that, just specifically on that last bit? Is there an education process, do you think, that you need to go through, not just ultimately to get your proposition in the shop window, but for incumbents to ultimately and naturally realize the benefits of your proposition, or actually do you think it's well-rounded enough that actually the benefits are already out there in the marketplace and now it's ultimately about choosing a service? Or do you think there's a bit of an education process to go through there?
I always think about business as the fastest route to A to B, right? So it's really hard to push a snowball up a hill. So if there's a general market sentiment that banks aren't providing innovation, you're just going to have generally consumers are now looking to tech companies and other companies to provide the types of user experiences they've come to expect for financial services. So either you can try to fight the trend and build your own and kind of compete head to head. And we've kind of seen how that's played out. Or you actually learn how to partner and say, hey, these guys actually bring something pretty interesting to the table that we really don't have as a core competency in-house. And maybe if they're actually building a sustainable partnership and being open about the economics and splitting them fairly, where you can actually create longer term value for everyone, I think the more innovative companies are sort of starting to come to that reality. So, railsbank, for example, we don't have our own consumer product. So we don't compete with our fintechs in terms of saying, hey, we're going to launch this and then compete with you. They're much better than we are at creating front-end user experiences, customer acquisition, brand experience, kind of all those things. And we'd love for them to continue to own that piece of it. We're really good at APIs and operations and connecting all the different pieces of these super complex ecosystems, simplifying them down and providing them through one contract and one API. Right, so that's what we're really good at. And if you look at the financial institutions on the back end, they're really good at underwriting, risk management, liquidity, capital. So all these different things that banks are going to be better at than most other companies out there in the ecosystem. And can you actually marry those different things together and provide a really incredible product by actually partnering instead of competing? And that's at the core of what we try to build at railsbank.
And do you think that's evolved over time as well? So do you think there are more partnerships and collaborations potentially now than there were 5 years ago, not just because there are more fintechs, but ultimately there's more of an acceptance that collaborating and partnering is the way to go, or acquiring, rather than trying to build it from within. I think I'm starting to see that regardless of whether you're an incumbent or a neobank, there are certainly far more partnerships kind of blossoming now than, as I say, potentially there were 5 years ago. And that kind of leads me on to my next question, but I'll let you answer that first.
Keep on throwing questions. We can do 30 at a time. So basically, I think the build versus buy decision has actually evolved over time, and it's not the same as it was 10 years ago. Mm-hmm. So typically build versus buy meant buy said you have to take something that was completely off the shelf, clunky, non-flexible, right? And then build meant you actually had to build the whole infrastructure from the ground up. And I take the co-brand credit card as a great example of that in this space. Is you either had to take the app that already existed and slap your logo on it, or you had to go build an entire credit card company from the ground up with capital and risk and people and balance sheet and kind of everything else you need, right? So that decision doesn't necessarily have to happen that way anymore. And that's been powered by platform and API companies, where certain companies will create a shared infrastructure for lots of different institutions. And instead of owning the customer experience on the front end, they'll actually provide all the different Lego building blocks through a series of APIs that allows a company to create its own credit card experience in its app, but not actually have to build the 70% of infrastructure to kind of get to the last 30% that they really care about, which is a customer experience.
Yeah, no, completely. I think it's certainly an interesting one. And as I say, kind of leads me on to my next question in terms of the broader fintech ecosystem. I think, with the pandemic, even pre-COVID, we were seeing a boom in not only fintechs coming to market, but successful ones as well that had either come to market with their own investment or had gone through various rounds. Fintech continues to innovate at a pace that we've never seen before. That's accelerated due to the COVID pandemic. So, what type of fintech now do you think will be ripe for acquisition over the next kind of 12 to 18 months, in your opinion?
Yeah, there's a couple categories that I think are interesting. I think infrastructure companies are interesting because it spreads the risk across of multiple companies that kind of build on those ecosystems, right? So like a VC, out of every 100 companies they invest in, 30% kind of make it through, 10% become mildly successful, and 2% kind of go to the moon. Platforms can kind of operate that same way, where you've standardized enough to launch multiple different companies, let each of them innovate and kind of grow in their own way. And even the smartest analyst doesn't know which ones are going to be successful in those early stages. And the key there is to help people kind of take an agile process to creating new products by standardizing and kind of making everything much more simple in order to launch, test, scale, get user feedback, and decide from there. So I do think infrastructure companies are particularly interesting because they allow multiple companies to build, and you can scale with those companies. The other thing I think is interesting is, in the consumer fintech space, there's a lot of apps that have created fantastic user experiences. Right? They connect investing and insurance and banking and credit and all the different pieces of that puzzle interacting together and really putting an individual's finances on autopilot. So I think there's some really incredible product out there. And I would view those as actually interesting acquisition targets to companies that are in the flow of funds for payroll. So actually the biggest challenge that any of the neobanks have is, how do I become top of wallet, and how do I kind of convince the user to take me from using me as a cool fintech app to actually being their primary bank account? And a lot of that happens at the point that somebody decides to make that actual flip to a direct deposit. So interestingly, like a lot of the big companies that are in the payroll space maybe want to develop their own products or are in some stage of doing that, or employers that have millions and millions of customers. So I think it would be interesting from a personal standpoint for them to acquire one of these next generation fintech apps and provide it as a service in the direct deposit payroll flow. And all of a sudden, boom, you actually have a really compelling offering that's great for the end user, great for the employee. There's so many things that you can do with that. And I don't think we've seen the coupling of those two things, which is the companies buying the fintech apps that would be of most use for their end users.
Yeah. And just, I guess, to move that on slightly, and again, another spin-off question. Sorry, I'm kind of putting you under pressure here, but when we look at, you mentioned some of the kind of PFM apps that have been brought to market that have got really cool interfaces, great UX, but some of them are hardly life-changing, but they do a job, and actually, as an app, they work fine. I think it doesn't matter what financial institution you work for. Some have come under criticism for providing, or fintechs to a certain extent, providing apps that aren't necessarily driven by the user or the customer. They're purely driven by commercials. Would you agree to that to a certain extent? And do you think that's shifting slightly? Do you think organizations are actually now starting to come to market with real key value propositions where there's a clear value exchange? For instance, when you start looking at managing debt within vulnerable customers and those that are suffering with mental illnesses and things like that. And I just wonder whether actually when we start looking at the open banking piece, we'll start to see more propositions come to market that add real value and can be life-changing to a certain extent due to COVID. It's a long statement, but would you agree with that?
I do agree with that. And I think a lot of folks would say the riches are in the niches, right? So I think the broad market appeal fintech apps, they cost a lot of money to acquire customers. And what's really interesting about the niches is that there's lots of existing ecosystems that are either financial services or frankly completely non-financial services focused, but have obsessed users that want to get more value and more experience kind of out of those platforms. So I think what becomes cool is not the financial product itself, right? So a credit card's a credit card, a debit card's a debit card, a bank account's a bank account. But what can it be if you integrate it to a much wider user experience that a customer already loves to be a part of and have the cashback kind of apply to something that they care about, or have it kind of go to somebody in need, add a charity element. I mean, there's so many different things that you can do through embedded financial experiences. And that's what ultimately differentiates a product and make people want to use it versus a pure, hey, I give more cash back than the next guy, because that's just a race to zero.
Yeah, I think that kind of bundling of services to a certain extent, and you mentioned about kind of the embedded financial products. I was chatting to someone the other day that was talking about open life, and ultimately that's what it is utilizing those open banking principles and extending them far and wide outside of just even open finance and open data to a certain extent. So I'm really keen to kind of keep an eye on that as to how that evolves. So going back then to, I guess, the railsbank proposition, banking as a service as a whole, do you think that we'll get to a point, or how far away are we, where banking as a service potentially becomes like a mainstay? So it's actually one of the more preferred choices to go to look at, maybe potentially rather than an alternative way of doing things. I wonder when it will be potentially considered the bedrock of how we move forward.
I think we're pretty far along that path already. So the benefits of banking as a service is essentially, for us, the banking as a service company, we gain economies of scale, right? Because even if you're the biggest company in the world, you're not going to have more buying power than yourself plus 10 other companies that we just aggregated and kind of work on together. Two, there is a tremendous amount of operational complexity in running financial services programs that most fintechs or consumer brands don't have an understanding of when they kind of get into the world. 45-page long contracts, minimums, this, that. It's just an absolute minefield of things to actually go out and figure out. So, one of our core competitive edges is we hired folks that have incredibly deep operational experience in kind of how these contracts work and how they play out over time and being able to model those cash flows. So there's there's another whole element to operational excellence that's better outsourced to a company that's a specialist and kind of doing it on your own. And then there's, the product piece. So a lot of the infrastructure and really complicated stuff to actually connect and get up and running, that's a really tough build. And it takes a really specialized team in order to actually go ahead and figure out how to do that appropriately. And to the average fintech or consumer brand, that's not their core competency or center of excellence. And if they did go down that path, most likely they're going to be making a lot of mistakes along the way and things that might be hard to unwind in the long term. So ultimately, if you take the economies of scale that platforms can provide, and you take the product centricity and this kind of core ethos that we do better as partners than any of us are going to do on our own, then it's starting to be why would you build it on your own? It almost doesn't make sense. It's like if I was to want to manufacture a sneaker, would I go build an entire factory, or would I just go to a contract manufacturer and actually have them build it? It's the same exact thing in financial services. We're building the factories. They can operate at scale. They're operationally efficient, right? And now we've actually built the business teams that can actually go out and help these companies scale and tell them, these are the KPIs you focus on in the first 30. These are the next 30. These are the next 30. Here's your dashboard that kind of benchmarks you against where your performance should be. These are the different items. All of that you're never going to get building by yourself in a bubble. It's kind of like going back to business school. Like, why do they have us work in groups? Because you do better when you have a lot of different ways of thinking and you bring those ideas together to kind of create a core product. So I think we're at the point that, if people haven't realized it's a smarter way of working, then they're just kind of missing it. But as soon as anybody tries it, I think they just realize that, oh, wow, why on earth would I have ever thought of doing it any other way?
Dov, loving the sneaker analogy as well. So that really hit home. And many thanks for your time. I'm just going to wrap things up now. What I will say is that whilst this is available in the on-demand section of the virtual platform, I'm sure if anyone wants to be connected with you post-event, you'll be open to that either via the virtual platform or through myself. So if you do want to pick up with Dov, there's clearly lots of exciting innovation going on at railsbank North America, not just everything else that's happening in the around the world. So it's good to give you guys some airtime, that's for sure. Many thanks for taking the time to speak with us today.
Thank you. We appreciate it. And I'm super active on LinkedIn, so feel free to connect there and kind of keep up to speed on everything that we're doing, and love the feedback. So thank you so much for having me as a guest. This was great.
Cool. Thanks, Dov.